Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company on a very interesting day on the markets. A bit of a choppy trade, if you will, but look at that. We fell quite sharply on the open, down by about 0.7 or so, which seemed a bit strange given that you had the S&P 500 at another record, the Nasdaq also advancing to a closing record. We had global oil prices up by around 2% and iron ore futures a little higher as well. And it did seem that the market sort of course corrected on that sell-off on the open, and then we saw a bit of positivity heading back through into the afternoon session, and we've closed pretty flat there on the CBO 200. The ASX 200 just eking into positive territory, up 1 point. Clarity Pharmaceuticals is the top performing stock. Now, I had a great chat to Michael Frazis earlier from Frazis Capital, and he has that stock on his radar as one that he is keeping an eye on. You can catch that, and of course all our interviews from the day on ausbiz.com.au. But it certainly was a very choppy Tuesday as we await CPI, so a little bit of caution ahead of that very important June quarter CPI data coming through tomorrow. Trim mean potentially rising by about 0.7%. And we've got AI calling there too, because it's the first time that a bank, CBA, has specifically cited AI as the reason for job cuts. The bank eliminating dozens of jobs in its call centres after introducing a new chatbot system to answer customer inquiries last month. But we should point out that it's only 45 of the 3,000 call centre jobs. But the Finance Sector Union does say it's the first time that a bank has told the union redundancies are because of AI. Let's have a look at how the banks finished the day's session. And CBA extended from yesterday's declines, down another third of 1%, $174.22. NAB having a pretty good session, up by 0.5%. The others all in the red today. Also looking at the miners, I did mention a little bit of a pickup in iron ore futures, but BHP was the only one that really took that, up by a third of 1%. Rio coming through with its first half numbers tomorrow in London, and Fortescue is down by 0.1%. And consumer staples, Endeavour Group was one that was hit pretty hard today, a broker downgrade, down 1.2%. Treasury Wine Estate as well, we did have an update from them, and of course an update on how much wine we are consuming, or I guess that Treasury Wine customers in general are buying. Woolworths pretty flat there, $30.90. Let's have a quick look at some of the key stories. Viva Energy, it posted a 10% drop in first half convenience sales, driven by a near 30% fall in tobacco sales. Now, this is due to plain packaging rules and health warnings, which saw a 27% slide in tobacco sales. Viva now expecting profits to fall from 452 million to around 300 million this year. Shares down 6.3%, but off the earlier lows of the day when they were down about 11%. Boss Energy continuing to fall another 7.4% with a round of broker downgrades. It's lost more than 47% now after warning, since Monday I should say, after warning it was unlikely to meet production targets at its Honeymoon project in South Australia. CBA down by a third of 1%. I mentioned those roles being made redundant. We should point out though that staff chose to take the redundancy payments. Apparently they were offered the opportunity to be redeployed elsewhere within CBA or reskilled. Tabcorp also in focus. It traded higher after Aware Super exited its major stake following strong gains in the betting stock earlier this year. And Michael Hill, well, shares are actually high, but a bit of sad news, the death of the founder, Sir Michael Hill, aged 86. All right, let's welcome to the COB Martin Crabb from Shaw and Partners. Now, you came in with your green tie, all buoyant.
Absolutely.
What was the turnaround? Was it your tie?
Yeah, I think my tie did all the hard work. Obviously, I had my work cut out with your red dress this morning at down 70. Really weak open, wasn't it? Because you kind of looked at Wall Street overnight and thought, oh, it's a bit of a yawn day. Everyone's waiting for the CPI in Australia. Everyone's waiting for the FOMC. We've got obviously 2 of the Mag 7 reporting tonight and another 2 the following day. So we'll just have a nothing day and a really, really weak open. And I thought the news that the EU and Europe, EU and the US had done a trade deal. It looked like now everyone's going to pay 15%, uncertainty out of the way. it should have been an okay-ish day, and then it would just come back to who reported. But yeah, we opened really, really weak, and then throughout the day we just saw buying. So the financial sector still being the one that's being used as an ATM a little bit at the moment. And I think we can probably put that down to stickier interest rates and stickier bond yields, and maybe some of the interest rate sensitive sectors, people are taking a bit of money out. And we just saw a pretty good rally right across the board. The retailers, the miners, as you pointed out, BHP was pretty weak at the open, ended up on the day. So I think there's still people out there putting money to work into the market, despite the fact it's an all-time high and very high PEs. People still want to buy equities.
Let's have a look at some of the stocks in particular, though, because Viva Energy was one really interesting on the tobacco sales. Is that the main reason why it was sold off today?
It seems to be that, yeah. I mean, I think they said if you took smokes out, sales were down 2%. So, look, the economy's relatively buoyant. Most people are saving over and above what they're paying in interest. Interest rates are coming down, tax cuts are coming through. So most Aussies have got money to spend, but they're just not spending it. So if you think about, cigarettes is quite a specific thing, because anyone who knows a smoker probably knows that they've switched to a bootleg brand.
Oh, okay.
Like there's one called Manchester, which sort of smells like Marlboro, but it's a tenth of the price. And a lot of that's illicit, right? So I'm not a smoker, but I know people who are, and you go into the tobacco store and you ask for a brand and they go, do you want that brand? Do you want something that's cheaper that I've got out the back? So that's absolutely smashed tobacco sales. I think Metcash pointed that out in their results. So supermarkets are the biggest purveyors of tobacco, and convenience stores and ones owned by Viva Energy and Ampol, for example, are also big. So you kind of look at them and go, oh yeah, that's a petrol retailer. They're going to live or die by the pump price and refiner margins. But with Viva Energy, it's a tobacco retailer, and tobacco sales have plummeted because smokers are switching to these illicit brands. The government's missing out on a lot of tax revenue, but also these retailers are slumping. So we had the charts up there of both Ampol and Viva Energy, both very, very similar. Viva's gone up by more, but it's come down by more. And you can see the move today. When I put this chart up together a little bit earlier today, the stock was down 10%. So I think it had a little bit of a rally into the close. But still, these guys have been on downtrends for well over a year now.
I wanted to try and find the story that I was talking about, which is escaping me now as I'm trying to quickly Google, but about the wine consumption as well, because I wonder whether that's a story that tells a tale as well. Australian wine exports, that's just to the US, sink to the lowest in 20 years.
The wine consumption is falling everywhere for two major reasons. One is demographics. Kids are not drinking. Kids are drinking about 30% less alcohol than their parents, at particularly at the same stage of life. So the whole idea is when you're young and you don't know any better, you get drunk all the time. Well, people these days, because of zero blood alcohol driving, but also just being a bit more sensible.
Are they just smarter than we were, I think?
They're a lot smarter. Kids are always smarter than their parents, right?
Yeah.
Or they think they are. So consumption amongst younger adults is much, much lower, 30% lower, but also GLP-1 drugs are having an impact. So a lot of the side effects of GLP-1s are lower food consumption, but much lower alcohol consumption. So speaking to people who are taking the drug, they say the need to have a drink is much, much lower. So I think that's also happening. And for something like Treasury Wine Estates, it's all about Penfolds for them. So Penfolds is like 95% of the money. So if you've got a weaker luxury market globally, so Chinese consumers, for example, you've got kids drinking less, and then you've got people who are taking GLP-1 drugs, all of that's coming together. So we're seeing wineries in France go broke, so you can buy a really cheap winery if you've got spare cash, but also stocks like Diageo and other global liquor businesses are all struggling on the wine front.
Yeah, I was just wondering whether the move away from smoking cigarettes, which happened sort of 20, 30 years ago, is now moving to alcohol. It's a fascinating tale. We don't have all day to talk about it, but let's move to another stock, IDP Education as well.
Yeah, so that's a stock that I don't know if it hit an all-time low today, but was down heavily again. So this is not a great share price chart for anyone, including me, who's been invested in this stock in the past. But this is probably getting to a point now where it's going to get kicked out of the ASX 100. So they do a review every quarter or so. The market cap of this stock is now, I think, below $1 billion. And it's typically sort of 2.5 is the number that you need to have. So unless the S&P ASX Index Committee have a very strong reason as to why this stock should stay in, that's probably going to be another stock that's going to get kicked out. So we're finding there's so much passive money in the market, Juliet, that when a stock goes in or out of a benchmark, it can lead to further buying or further selling. So have a look at a stock like Hub24, which entered the index about a year ago at $60, is now over 100. not all of that's index buying, but some of it is. And similarly, when a stock goes out of the 100, there's selling of it. So I don't think the pain's over for IDP Education shareholders just yet.
No. All right, it is a busy week. We touched on CPI here tomorrow, but we've got the Fed as well. You've got a chart showing us the Fed fund futures rate.
Yep.
The expectations here as to whether or not we may see Powell make a move.
Yeah, so the black line is what the market was expecting a month ago. Terminal cash rates below 3%, and you know, quite a lot of cuts in the back end of this year. And you can see how it's drifted higher. We've pretty much got a full rate cut taken out, and we're now looking at terminal cash rates around 3.2, 3.25, which is sort of in line with where the Fed's saying is the appropriate long-term rate of interest, the R star or the R neutral rate. So the issue that Governor Powell's going to have, or Chairman Powell, I should say, when he makes his press conference Thursday morning our time, is inflation's probably going to have a 4 handle on it in the latter part of this year, as these tariffs come into the market. So some of them will get absorbed by the exporters, some by the importers, but a lot of them will get passed on to consumers. And how can the Fed cut rates if inflation's going up to 4, not down to 2? So I think that's what the market's come around to see. It'll be real. It won't be any interest in the decision because there won't be one. They'll hold, but it'll be what he says in the presser, because they're like Australia now. They give quite an extensive presser. Everyone gets to ask a question, so you will get to see the whites of their eyes in terms of what they're thinking about. How long do they wait to see what the tariffs are going to do, and what's the Fed reaction function? Because he's kind of made it clear that given the strength of the labour market, they don't have to do much there. It's weakening, but it's not breaking, so they can afford to let rates stay high. This sounds very familiar, doesn't it? This is kind of what Governor Bullock's been saying, but I think we're at higher rates for longer in the US.
All right, higher rates for longer, and of course looking very closely to August 1, which was meant to be the tariff deadline date. But as you touched on earlier, potentially what we've seen with Japan, with the EU, does that mean 15 is the new 30 potentially? Yeah,
it looks like that, and obviously the big holdout's China, and they've been given more time. So I think people were hoping 10 was the new number, but he said sort of overnight that 15 to 20 for everyone else, one of those two numbers, which would mean Australia potentially pays 15, not 10. We should be 0, right? We've got a trade surplus with them. We shouldn't have any tariffs, but that's an argument for another day, and probably one that's not going to win either. So I think, but the thing is, as these deals are done, Juliet, it's just one more bit of uncertainty taken out of the market, and you see the volatility index go down and you see the share market go up. It's not because everyone's becoming more positive, it's just the uncertainty's going away, and with less uncertainty, you're more capable of buying equities.
All right, keep the green tie on maybe, Martin. Thank you, as always, Martin Crabb there from Shaw and Partners. All right, let's look into the stock of the day, which was Viva Energy. We touched on that a little bit, and we heard from our experts, Philip Pepe from Shaw and Partners as well, and Rudy Philippette Van Dyke from FN Arena.
The only get out of jail card there is that the percentage of cigarette sales has shrunk quite a lot over the years. So the impact, the headwind for the likes of Coles, Metcash and Woolies is not that large these days. But clearly the impact on Viva Energy is definitely there. Don't get blindsided here. There's obviously clearly also a consumer spending impact in there as well, apart from the listed and that, I think, in itself is a warning signal for investors ahead of August.
For me, the concern is fewer bums on seats, fewer cars through the petrol station, because A, it's expensive to drive, B, we're switching to electric, so you don't need to go there. It's a convenience store, so you pay a premium for the privilege. Traditional supermarkets are open later and later, and a lot of places you can walk. So I just think their industry is structurally challenged for the foreseeable future. This is not an opportunity to jump in a drill baby drill world. Can they actually increase their refinery margins to offset this? I don't know. They think they can. I would just buy a Coles or a Woolies or a Metcash if you want a retail exposure.
All right, well, after a choppy day, we have just closed marginally higher on the ASX 200. Let's have a look at some of the leaders that got us there, including Clarity Pharmaceuticals, EVT, Austral, Infatril and SiteMinder, but as you can see, they weren't exactly massive gains. To the downside today, Viva Energy we've touched on, also a switch out of these uranium players. Boss, of course, hit by quite a lot of broker downgrades, and Liontown being sold off by 4% after its market update today. In the small end of town, Freelancer came through with an update as well, sending shares up by 21% today to 33 cents. Heading the other way though in the small end of town was the likes of Sunrise, down more than 16%. Sun Silver, which has been one that Jonathan Takadina has touched on a few times, down 13.7% to 95 cents. Tonight, a fair bit of data out in the US actually, including US home prices for May, US June JOLTS openings. The Conference Board Consumer Confidence Index for July tipped to lift from 93 to 95.9. A lot of earnings as well, including Boeing, Merck, PayPal, Procter & Gamble, Spotify, Starbucks, United Health, UPS and Visa. Tomorrow, of course, it's about the June quarter CPI, the Rio Tinto first half numbers coming through in London time, and also a update from the likes of Mineral Resources. Those are coming through thick and fast, those updates. The local market finishing fairly flat there, unchanged really on the CBO 200. And on the ASX 200, we have edged into positive territory, up 7 points. And encouragingly for those who love a psychological level, we're above 8,700 again, 8,704. EVT, Austell we touched on as some of the better performers. And when it comes to sectors, you really saw it being driven by the likes of energy, infotech, industrials, healthcare, utilities. So a big switch around because 8 of the 11 sectors ended higher, very different to when you looked at the market map early this morning, and it was, as we like to say, a sea of red. All right, we'll be back from 9:45 a.m. Eastern tomorrow. We'll see you then.